Hi, everyone. Welcome to our June roundtable. We are back. This feels like a very interesting market. I'm not sure which way we're going to go, but I'm very interested to hear from our regular panelist, Steve Soretsky out in Vancouver. Hi, Steve.
Always a pleasure. Looking forward to it. Lots to talk about.
And John Pisalis of Velocity in Toronto.
Hello again. Yeah, definitely interesting times in the housing market. So we'll have a lot to chat about.
Yeah. All right. So we're channeling all the moods of summer. I'm, I'm going tank top. You're going full suit.
Going summer paisleys here.
John wears a full suit in the summer too.
I'm
He only changes the
that
fabric.
guy.
It just becomes linen.
It's true.
All right. Let's start. Steve, I'm really curious. What is the market feeling like right out in Vancouver right now?
Slow, very slow. I think what I say is like it's a tough market because it's hard to price things. It's hard to give advice to clients right now, which is like feels like a bit of a cop out, but like it's like entry level houses, for example, are still moving fairly well. Like, you might be in multiple offers sometimes. So like there's that pocket. Then you go to like other segments of the market, like the downtown condo market, and that's just completely dead. It feels like even if you do a couple price reductions, you still get no showings. And so like it's like, yeah, you go in there and say, okay, I think your place is worth 1.4, and you price it there and you get no showings. You drop it to 135, you still get no showings. Or you know what I mean? Or like you say, hey, I think it's worth 1.4, and then all of a sudden you're in multiples and it sells for 1.45. Like it's just the market is just really trying to figure itself out. But I would say in general, it's quite slow. There's not a lot of showings. Buyers are sort of sitting on the sidelines. Inventory is growing. Sales, we can get into some of the data in a little bit, but there's quite a bit to unpack there as well.
All right, John, I know you've looked at the latest numbers from Toronto, but first, again, what is the mood like? I'm getting a sense of slowness here too.
Yeah, I mean it is slow. It's sluggish. I mean, again, like it's a bit tricky because depending on what you're looking, like if you're looking for starter home, you're thinking it's not slow. Like, I was in multiples last night. It was competitive on this really nice listing. So depends on what you're looking, but generally, yeah, I mean, even low-rise houses is slower. Like sales are pulling back, listings are increasing, fewer offers on offer nights, some offer nights failing and homes are getting relisted. And then condos also very sluggish. I mean, we have a record number of condos for sale in the GTA. Now, I mean, we have to take that with a grain of salt because obviously we've been building tens of thousands of units every year. So, even with a record number of listings, we still are at about 4 months of inventory. But the condos are very slow, like very few showings. And it's a very sluggish market right now on both sides, and I think both sellers on each side are kind of adjusting to kind of these dynamics right now.
So, John, I did see some of those big numbers. So, are you saying people are hanging on to the prices they want, sellers right now? So, you're not really seeing any price reaction to this surge of condo listings?
Yeah, no, we're not. I mean, people might say, well, prices are down year over year, which is correct, but that's partly because last year we had this slight rally and prices accelerated. But on a month over month basis, I mean, prices have been pretty steady. And in fact, condo prices have been up a little bit, but I'd say condos are flat. And yes, largely this is like condo owners and investors largely sticking to their prices. If we think about how how house prices typically decline, like typically you have this inventory that just starts building and building and building. And then eventually, you have one or two, sellers who are price takers that reduce the price. They kind of set a new standard for their building. And we're not seeing a ton of that yet, right? Most sellers are just waiting, which is partly why inventory is building up because they're kind of relatively sticky on their prices. So we're not seeing a ton of movement there yet, but we'll have to see. Obviously, if inventory keeps building, eventually you might start to see people just, pull the plug and get out of the market.
So the number is a big one, 9,951 condo units available for sale. You recently wrote on your blog with us at Move Smartly, the highest number of units for sale in any month in recent history.
Mhm.
So that's one big number. What are the other numbers like from Toronto for the month that just ended?
Well, I mean, I think the other key numbers are just months of inventory trending up for both low rise and for condos. Condos are over 4 months now, low rise around 3 months. Um, and again, this is just a sign that, again, listings are outpacing sales right now. And I think that's kind of going to be the thing that we're going to be watching over the next, say, as we move to the summer. I don't expect much to change in the summer. And probably it's going to be a relatively similar trend in the fall, but we'll see.
Yeah, it's interesting. It's kind of a similar story here. So if you look at like new listings for the month of May, outside of so for condos, this is kind of where we're seeing I think most of the issues is actually in the condo market. So new listings in Greater Vancouver for condos in the month of May, highest on record outside of May of 2021. So
Wow.
May 2021 was like the peak for like new listings in the month of May. Keep in mind that May 2021 was also like a crazy month for sales, right? So we're kind of now going in the opposite where like the sales aren't following, but the new listings are pushing higher. So yeah, we're seeing inventory build there. Detached, like you look at the new listings, it looks pretty normal. Obviously, like the detached is just like I think you're seeing that composition change over the last number of years, decade, where we're building condos, we're not building new single family houses. Single family houses continue to sort of be wound up into land assemblies to be built into higher density. So yeah, I think that's where we're seeing most of the issues is in the condo space. Not it seems like not just in Toronto, but in Vancouver here as well.
So, Steve, are you seeing prices coming down yet in the condo area, or is it the same as John is saying? Things are holding.
Uh, I think the price is like, it's weird, right? Like, I mean, if you look at the apartment prices, the median sales price is like flat, 0% year over year. The benchmark is up 2%. So it's like, yeah, you could argue like prices are up, but like I think in reality is what we're seeing is like really good apartment units or like it's a great location or like a unique building or it's fully renovated. Like those are the ones that are moving. And you have this like cohort of product that just is not moving. And so like because that product is not clearing, it's not selling, it doesn't get reflected into the data to show that, whoa, prices are actually falling. So I think that this is the problem where it's like you can't always just simply look at the data and say, oh, well, and draw a conclusion. Like you kind of have to like unpack the market a little bit. And I think that's the reality. I think for the bulk of condos out there, prices are falling. Like if we're going to give advice to clients, it's like, hey, listen, like, yeah, your neighbor sold for 600,000 6 months ago, but like, you got to be priced at like 579 today and hope that you get 560, right? So I think that's kind of like roughly the conversation that we're having with people right now.
So let's talk about the different buyers for these different products. Where are they? It sounds like the competition for low-rise homes, because they're just, so much more demand for it, is still pretty healthy. What's happened to the condo buyers? Or is it just that investors are cashing out quicker?
It's both. I mean, investors are cashing out. I mean, if we look at the data, like a huge increase in listings of vacant condos, and typically investors are the ones who like, I think owner occupied, I wrote in my latest post, I think owner occupied listings year over year are up like, I think 15%, whereas vacant are up like 50 something percent. Again, that's usually a signal that investors are selling. So investors are exiting. But on top of that, investors are not active buyers anymore for the most part, right? So that has taken a big component of the buying pool out of the market because it's just like the math doesn't work if you're paying today's prices at today's rate. So that's kind of kept the buying pool a little bit soft right now. And obviously the people who are buying are people who want like an owner occupied 1 or 2 bedroom condo. But these small units in particular that are typically investor owned are a little bit more sluggish, I'd say.
I say that's like similar thing here, John, which is like it's not so much that like investors are like flooding the market and like running for the hills. It's just like they're just not buying, right? So it's like you took a huge chunk of demand out of the marketplace. And so like the people that need to fill that gap now is end users and first time home buyers. And obviously like the prices aren't cheap. I mean, the rates have gone up a lot and the prices have come down modestly. And so like filling that gap without the investor base, I think that's kind of where you have that air pocket. Um, so I think that's, yeah, I mean, that's kind of what we're seeing on our
Yeah, and I
end.
should add, like the vast majority of investors are still investors. Like there are tens of thousands of condos that are still being rented. You don't need a huge increase in investors wanting to exit to shift the market a little bit. 1,000, 2,000 investors kind of listing their properties, over the same period, obviously shifts the balance. So that's kind of what we're seeing. It's some are getting out, maybe they have multiple units and just need to exit or over leverage, but the vast majority of investors are actually still holding.
So I have a question for you, John, on what are you guys seeing? You track it better because Toronto seems to have actual data on this, but like,
Mhm.
what are you seeing in the rental market? Are you seeing rents actually declining,
Oh
or is
yeah.
it? But is it or like are they declining because like seasonally things are a little? I don't know. Like, is this like a real concrete trend in place?
I think it's a short-term dynamic. Like, so rents are definitely down. They peaked in August of last year. So we're down from there. I think maybe 6, 7%. We're roughly where we were last year, but it's largely because we saw a huge wave of condo completions in the second half of last year. And I was just at a conference. I think Sean from Urban Nation mentioned there was something like, I don't know, 20,000 completions in the first quarter, which is like insane because we normally complete 20,000 in a year or 18,000. I can't remember what he said, but just a huge number of completions sort of in this first half of this year. So all of this supply is kind of hitting the market for rent at the same time, right? Which is kind of putting downward pressure on rents. Obviously, once those are absorbed, we'll kind of go back to a more normal market, but there's just ton for tenants to choose from right now because of all of these completions.
It's like an interesting dynamic too. I'm sure in the rental market, but I'm seeing this like a little bit in the resale market where like you think about like a high rise, let's just say a high rise is like 10 years old. Like they're all pretty much the same, right? I mean, yeah, your O1 floor plan, your O2 floor plan,
Yeah.
it's just up the building. And so we're seeing this dynamic where again, it's not like en masse, but like we're definitely seeing it, which is like, you list a unit on the 15th floor, an O1 floor plan for whatever, 699, and you're sitting there and you think you're priced pretty fair, and all of a sudden your neighbor comes on 2 floors higher for $30,000 less and just completely undercuts you because like it's just all it takes is that one like more motivated seller was just like, I don't really care. Like I just want my money and get out of this thing. And the problem is like, especially in these like condos, particularly these high-rise condos, is like they're all the same units, they're all the same floor
True.
plan.
Yeah, you
It's
can't
just
differentiate. You're right. And I think that's like, we haven't seen a lot of that, which is why prices have been sticking. But you're right. The second one or two people are just like, I don't care. I just want to move on. I mean, that's how you have downward pressure on prices because the second someone sees, the same unit sell for 670, they're not paying 699 anymore. Doesn't matter what everyone's listed for. Like in a slow market, the buyers are going to wait out for those sellers to cave in, right? Because
yeah.
that new lower price has kind of set the expectations, right? And it works in reverse. Obviously, in a rising market, it's the sellers that are the optimists who are holding out, right?
Yeah.
Uh,
So we've truthfully been like, yeah, I've had that experience on our own book here with so a couple clients, which is basically like, yeah, you come on and then, someone in the building kind of comes on a little bit more competitively and you're almost like in a little bit of like a price war of like,
mhm,
okay, like who's gonna blink first?
mhm,
And so like I said, it's just an interesting dynamic. It's something that, I think the market or, locals here aren't quite used to. You're used to that up market and all of a
yeah.
sudden, things are changing and it's kind of like, hey, do you want to be the person that sets the new benchmark in the building or do you want someone else to set it for you?
Mhm, yeah.
So the new normal is having to wait a few months to sell. That's unheard of, John,
Yeah,
in Toronto.
that's true.
And that's just for the condo market, correct? What is the months
Yeah,
of
mainly.
inventory for houses? Is that still
Houses
moving
is still
quicker?
3 months-ish.
So that's still a climb up. That's still an increase from
But
our
I
headier times.
but I feel but con I think it's a bit different. Like houses are still moving, right? Like if you're a decent house priced well and an okay, like you're still selling quickly. That a lot of houses that are just listed that are overpriced, right? Whereas, and that's why they're not moving and are sticking. Whereas in the condo market, it's not so much that they're overpriced, it's just that there just isn't as much demand, right?
Yeah.
So I think like the markets are slightly different.
I would say that's the same thing here in Vancouver. It's like doesn't matter. There's always a bid for that single family house, it feels like.
Yeah.
Whether it's from a builder or from a young millennial family or what have you, like each house is kind of unique, each one's different. There's still not a lot of supply there. You're not getting 5 offers like you did at the start of the year. It might take you 2 weeks to sell, and you might sell 20 grand below list.
Mhm,
But it's still moving. It's still moving relatively quickly.
mhm.
All right. So a question then. We just had the first rate cut since the rate hike cycle began in March, I believe, in 2022.
Yeah.
And now we've gone down 25 basis points, so 4.75. Is that enough? With investors, they've been looking at a very unreasonable number in terms of carrying costs for a while. So I'm not sure that this decrease with interest rates will stop them from wanting to or needing to leave the market. And in terms of end users, what do you expect this to do for end users? Will this see more of them encouraged to go back in?
John?
Uh, I don't see this changing very much anytime soon, personally. I don't think it's enough of a cut. I mean, I was just speaking at a conference yesterday and someone was like, I don't know, I think trying to challenge me because they thought it would shift sentiment, like this 1/4 point cut. And I was trying to, because he's like, well, that happened in 2023. And I'm like, or at least the pause in 2023. I'm like, it was very different because fixed rates were lower because of Silicon Valley Bank crashing. That's what shifted sentiment. It's very different today. Fixed rates are still elevated. And more importantly, like 1/4 point, it's not like there's a ton of expectation that we're going to get a lot of cuts in the short term, right? I do think if the markets were expecting 3 more cuts by the end of the year, so a full percentage point down, yeah, maybe it would kind of fuel a little bit of excitement. But we're not expecting that. I think it looks like rates are going to stay a little bit higher for longer. So I don't think it's really fueling much demand. Rates are still too high to buy homes. So we're not going to see much shift, I think, in sentiment until the beginning of next year, personally, is what I think.
Yeah,
And
I mean,
Steve, we've been used to that though, right? Like this way that Canadians surge back in as soon as they see something that, makes them feel optimistic. Do you think, things are different right now?
I think I too think from a sentiment perspective, it might get a few more people off the sidelines. It might create, I'm not gonna say urgency is the right word, but it might get a few people off the sidelines and say, hey, you know what, like, all right, I'm ready to go. Like, I still think, yeah, if you look at it financially though, right? I mean, like 25 basis points isn't going to move the needle for anybody. Your variable, so it drops your variable rate mortgage, which, like, let's be honest, nobody's really taking on variable rate mortgages today, anyways. Fixed rates, I think, is really like the thing to watch. Is like, follow the Canada 5-year bond yield, and that'll probably be a good indicator as to when activity is going to pick up. I mean, it's coming off a bit, but it's still higher than when we started the year. And so people are still paying 5% on a 3-year fixed rate mortgage, and so that really hasn't improved. And I think that I think that's going to be the big story, is just watching what happens with bond yields to see if those fixed rates come down.
And that, of course, is in response to where, people think the market is going in Canada, the overall economy, I should say, over the next 6 to 12 months. Now, the Bank of Canada said, look, I think we are winning the inflation battle. we're moving towards a 2%, but it wasn't an overly, we're zooming towards our goals. I mean, there is a sense that there's a lot of economic uncertainty right now overall, not just in Canada, but globally. So what do you two think about the next 6 to 12 months outlook? John, you already said that the expectation for future cuts is slower than, a few months ago, people were expecting up to 6 by the end of this year. That's already, seems like it won't be the case. So what do you think, where are we going over the next little while, economy wise, and what will that mean for the markets?
Tough to say. I mean, economically, certainly think things are sluggish, but I think with respect to rates in the housing market, if we only get one more rate cut this year, which is very possible, like I said, I think we're going to have a sluggish fall market. I don't think very much is changing in terms of the dynamics or how things feel. We might get buyers starting to jump in the new year, like January, February. In particular, I think in the low-rise markets, on the market for houses, the condo market's the one where it's a bit of a coin toss, and I don't know, and it's hard to predict what's going to happen, because if rates stay elevated, we're probably going to see inventory continue to trend up, right? And at what point do investors or condo buyers start to break a little bit and ease their prices, and we see some slowdown there? I don't know. That's a really tough call. That's a harder one to predict. But I suspect, like in the new year, the low-rise market will probably be busier, and early next year.
Well, I just look at it as like, if you have so you talk about 25 basis point rate cut today, like we just talked about earlier in the show, which is like the investors aren't really active in the market. Like I'm not convinced 25 basis points changes the math for a condo investor today.
No.
Like, yeah, and so let's just say your fixed rate mortgages move. Like if you get your fixed rate mortgages from 5 down to 4.5, again, I don't see that changing the math on a one-bedroom condo on a cash flow basis for these investors. So like either your rents are going to have to keep going, are going to have to go up, your rates are going to have to fall a lot more, or your prices are going to have to adjust, or a combination of the three. And so I think that's going to take a bit of time to play out personally. So yeah, John, I'm kind of on your camp, which is I'm not really convinced that a whole lot is going to change in that condo market in the very near term.
And I think we got to keep in mind, it's funny, I was tweeted about it the other day, and Adam Vaughan, who used to be the former parliamentary secretary on housing, kind of responds to my tweet about it, people selling, and is confident that is driven by the capital gains tax. And I'm like, it has nothing to do with the capital gains. I don't know what you're talking about. It is 100% due to high rates. So investors renewing, especially the ones that have a lot of debt on their properties, just can't afford the negative cash flow anymore. Rents are declining, tons of completions in the pipeline. And again, like I think the optimism that holding on to these cash flow negative properties is a great investment because it's going to go up 6, 7, 8% per year has died down. Like condo prices have been flat for 4 years, right? So if I'm an investor, why am I putting out of pocket $1,000 or $1,500 a month to hold on to an asset that's not going up? Government's cutting non-permanent residents. That's going to take even more pressure off of rents and condo prices. So the sentiment has shifted for condos a lot. And that is what is, I think, fueling a lot of the surge in listings of people just saying, I don't want to hold on to this anymore.
I know we've talked a lot about like the speculation side of it and investors being so active in the market. I still think like the kind of free market figures itself out, right? Which is like you had all these investors piling in and absorbing supply because of what the market dynamics were, which is prices going up 8, 9, 10% a year. When you're getting 0% on your savings account, it's like a natural now today, right? You get 5% in a GIC, and condo prices, investing in a condo is no longer interesting or lucrative. So I don't know. I feel like the market's kind of taking care of itself, which is like, you talked about 4 years, no growth, and maybe we'll go another 4 years. So it's like 8 years of no growth. And meanwhile, you're, negative cash flow, $500 a month. I think that'll turn people off hoarding condos pretty quickly, I think.
So truly entering a new era of a slower and steadier state. is a sense I'm getting. And we'll see whether we see more buyers return. Is there a bit of a summer lull? Like, are buyers off in the cottages or something?
They usually hit pause. Like not quite yet, but July, August, anyone who is active in the spring and didn't buy, like many of them just hit pause and are like, okay, call me back in September and let me.
Yeah, it's a spring and summer lull.
Yeah, it is. That's what it feels like this year, actually. That it's more like a spring and summer lull. It's a good point.
Well,
Hey, I have a question.
weather-wise, we just jumped into summer here. Steve,
Yeah.
what's it like in Vancouver?
Wow, it's been horrible weather-wise. It's just fine. Looks like it's fine. The forecast finally looks like it's starting to heat up.
Oh my gosh, we stole your weather.
Yeah, it was horrible. It was like pouring rain the last week and felt like winter time. But John, I was going to ask you, does the market to you today, does it feel better or worse than last year?
It's a good question. It's kind of it feels similar, but like stats wise, it's actually better. Like there's definitely more inventory in the second half of 2023, but it's starting to feel like that. You know what I mean? It definitely feels like the second half of last year. And for those who are kind of don't follow the housing market as closely as us, like last year, the market rallied in the first half. And then, when the Bank of Canada thought they're going to pause, and then things like slowed down dramatically in the second half of 2023. And that's kind of what it's starting to feel like, just kind of slow. It's actually, I would say it's not as slow as last year. Like if I think of it objectively, there's still more multiple offers on houses. Houses are still selling a little bit more quickly. Condos are probably feel a little more sluggish than last year.
But am I right in thinking it feels slower because we did have that bank collapse in the US set off a bit of a dip with fixed rates in March, I believe. Last year, that set off a really strong buying movement, So there was like this feeling like, oh, here we go again.
Yeah, at least actually, that was the market kind of last year peaked around May of 2023.
Right.
So it's still kind of booming up until late July, I think, or June.
So coming down off of that, in the summertime, I always think of roller coasters, but like, yeah, fine. That's a big dip. But now this market right now, it's following months and months of this slower, sluggish kind of new reality. So to my mind, it certainly feels slower, even if the numbers are different. Am I right in thinking that? Like amongst
Yeah, it feels like it. It definitely feels like it's more gradual too. It's been like a slowly more gradual kind of grind up in terms of inventory.
Well, guess what? Our prime minister has been worried about us. He's worried that we don't have a lot of news to talk about. So he decided to wade into real estate and just say something really big.
Yeah.
So Justin Trudeau on a podcast recently kind of maybe said out loud what people are supposed to think in their inside voices. And when asked whether there was a trade-off, a societal trade-off that we have to expect, whether homeowners overall, many of whom are in the boomer or the higher age category, would have to accept seeing the values of their home decline if we are to see affordability restored for younger generations. When asked that, is that something you have to accept as a homeowner? And we're told by our prime minister, no. We need the home prices to remain strong because these are people's retirement funds and other means of getting by. So that was interesting, especially since I believe we've talked about the CMHC report, which came out in 2022, that suggests that large-scale price declines would be required across Canada. I'm just putting this chart up here. In Ontario alone, it suggested that if affordability was to be restored to by 2030, we'd have to see, by this figure here, a 38% decline in prices in Ontario alone. So CMHC, that's the Federal Housing Agency, was suggesting that average home prices in 2021, that was 871,000 in Ontario. That's slightly up now. Would have to go down to about $551,000 to restore affordability. Affordability is, again, that 30% of your income, sort of that rough rule of thumb, should be spent on housing. So The federal agency thinks there would need to be a widespread decline, 38%. And those numbers are similar in BC, other provinces slightly less. The prime minister thinks no. So how are we going to do this magical thing?
So, I mean, you're right. It's kind of funny how his vision is obviously at odds with what CMHC is saying. But I mean, let's hit pause and just think about what our own housing regulator thinks. They think that builders are going to flood the market with so much supply that it's going to cause prices to decline. And as prices are declining, builders are going to build even more homes for prices to fall even further. Right? And they're going to keep doing that until prices fall by 38%. Like, honestly, like, I mean, it's remarkable that this is what anyone thinks. Obviously, that's never going to happen. I mean, right now, builders are hitting pause because they're not reducing their prices. I mean, no one wants to buy at their prices. They're basically saying, well, that's fine. We'll just go on vacation and come back to us when you're willing to pay what we want to charge, right? So it doesn't work like that. Now, the problem with Trudeau's statement, I mean, to be fair, no government is going to go out and say they want to crash the housing market. I mean, and I don't think it's the government's job to artificially try to crash the housing market. I mean, no one's doing that. But on the flip side, you should not have a government that actively goes out and says, we don't want prices to fall, and effectively we're going to do everything possible to keep them as high as possible.
And aren't they doing that, John? Like, we've spoken on this program about underwriting practices or mortgage practices, starting, loosening a bit in areas to which is leading to prices staying strong in some sectors, right? Like the condo market. So it's not just someone saying, oh, they can't fall. Someone maybe has a vested interest so that they don't fall.
Exactly. And I don't know, that's my 2 cents.
I mean, yeah. I think people don't like to hear it, but the uncomfortable reality is the market is manipulated to move higher over time. That's just what it is, and you can disagree, and you might not like it. I think that's just the reality. Whether you look at ongoing currency debasement every year through inflation, through increased government fees, through every year the cost of labor and construction materials goes higher. Every year you're bringing in more people into the country. Like it's governments need prices to go up higher so they can collect more tax revenues. It's designed to go higher. No government's going to come out and tell you that, but I think that's just the reality. And I think he kind of said the quiet part out loud, which is the Canadian real estate market, I think, is an issue basically of national security, which is they can't have a nationwide housing crash. It's not to say it will never happen, but they'll do their best that they can to try to avoid that. And it makes it easier to avoid that when you have 5 banks that basically, in my opinion, run the country. I think you look at, if you talk to any of these bankers, you look at OSFI regulations and stress tests and you say, it's interesting that the stress test hasn't really been that effective. Because in reality, there's so many workarounds that these banks have. These are just guidelines that are given to them by the regulators. But, I look at housing as the bank's collateral, and the bank wants to maintain their collateral, which is the price of your home. And the banks have a lot of power to lobby governments and the industry to support those valuations. So long story short is, like I said, you'll have price corrections. You can always have a price crash, but it won't be because policymakers decided so.
So in the wake of a huge housing budget that's going to, really tackle this problem for generations, the cat is out of the bag. This is what happens when you have a country that's overly reliant on the real estate sector. Steve, you're right. Our major banks are heavily involved. They have a vested interest in making sure that all their assets, which they're writing against, don't decline majorly in value.
Can we just unpack? Sorry to interrupt you, but this is so obvious. It's like people are just like, people get so upset and you're like, yes, but like, you don't make the rules. Like, all you have to do is look at like what happened during the pandemic. We told every borrower, like, don't worry about it. You don't have to pay your mortgage. Don't pay it. Take 6 months holiday. Don't pay your mortgage. I think it was what, 17% of all mortgages in this country were in deferral at one point. And now we're in a scenario where rates go up by 500 basis points, and the banks say, oh, well, we're not going to adjust your variable rate mortgage. Your amortization's gone from 30 years to 65 years. And
Or
we're now
negative.
letting you defer the interest because you're not even like that mortgage, let's be honest, like a lot of those mortgages are technically they're in default.
Mhm.
But like the banks are just like basically sweeping it under the rug and saying, don't worry about it. And you're like, we'll figure it out later. And because the bank doesn't want your house. The bank wants you to stay in your house, keep paying the mortgage, and maintain stability across the board. So I think it shows you right there, like you don't really have this like free market. You have a market that is definitely supported and propped up.
Yeah, and we
Yeah.
talked about this before, what they're doing with all these new condo closings that aren't worth what they paid for them. Values are worth 20% below what the investors paid. And in a normal world, the investor would need to cough up another 20% of the appraised value to even close on it. But the banks are basically saying, you know what, don't worry about it. We're good. We'll just basically finance it at what you paid for it. We're going to pretend it's worth $1 million, even though it's really worth 800 grand. You don't need to give us anything. And those people are effectively buying with zero down now because their 20% deposit has been wiped out by the price decline, right?
You're talking about blanket appraisals,
I'm
right?
talking about blanket appraisal. So new condo completions that are completed now that are not worth what people paid for them. Banks closing their eyes, basically financing them, saying, I don't care that it's declined in value. We're just going to pretend it's worth what you paid for it. They don't want to have mass issues in a project, units not closing, compromising the financing and the deal. Sales are slow. Why not kind of pump through some mortgages through the pipeline? And again, everyone's turning a blind eye to it. So yeah, it's not a free market. It is
Yeah,
definitely.
and John, like, most people that are listening to this would say, well, that's bullshit, right? Like, that shouldn't be allowed. That's not fair. Like, markets should be able to correct. And, people made bad investment decisions. They should have to basically succumb to those
Yeah, that's what
malinvestments.
should happen. 100%.
But yeah, but like you and I, like we don't make the rules. Like this is just like I feel like the goalposts are always kind of moving.
Yeah.
And I think you and I were both on the same page, which is like you could see what was happening in the pre-sale market, how high prices were going, the amount of like risk and speculation and dumb decisions people were making. I think people should have to pay for those dumb decisions, but clearly the banks, in most circumstances or in many circumstances, are certainly bending the rules to make sure that buildings close and developers aren't left with, you know, hundreds of buyers walking away from deposits.
Mhm.
And again, I think trying to keep and maintain stability in the marketplace.
But isn't it even more pernicious than that? I mean, John, you talk about builders aren't going to keep selling when there's a 38% price decrease. Well, guess who else doesn't want to see a 38% price decrease? The banks that lent against all these houses being worth more. Not only were banks around for some of these bad decisions, they were the funders of this party.
Mhm.
So, again, we are in a really tricky situation in Canada. This is what an economy that's heavily dependent on real estate looks like. The truth is, I feel like Canadians had a fairy tale book snatched away from them hey, that happy ending where we all get affordability? It's never happening.
Mhm.
I mean, I think this is what Justin Trudeau said is remarkable, not because it's not ironically, it's because it's the truth. A politician accidentally just said the truth
And listen,
out loud.
the other, I think, important part, and I said this in the vlog that I posted, that he said that I thought was interesting because I think it spoke to it. He talked about how, in the past, he can buy a home and save for down payment. He talked about the system today is different. The housing system, the math is different. Everything is different. It's 100% correct because the market today is so much more invested in housing that you have banks bending the rules, right? To protect their assets, to protect the investors, to protect the builder. You have, and obviously this was not the dynamics of a market years ago, trying to kind of prop up housing, overly invested in housing, and trying to do everything possible to keep house prices as elevated as possible. So yeah, it's
Not
obviously
just housing, but how many retirements and are dependent on Canadian bank stocks and the dividend they're paying
Well,
out.
exactly. How many of our MPs' retirements are dependent? I mean, our former housing minister is building a portfolio of suburban homes, for his retirement. And I think that's what he means. And I think that's what I think a lot of people are missing. It's not just that homes are, retirement plans for people who live in them. They have now become, people's investment portfolio. You know what I mean? Like where people used to kind of put money in their RSPs, put it into equities. Well, now many people are just loading up on real estate, right? So it's
Well,
not,
Steve's point is our stock market itself is affected by it. But a lot of people investing in the banks. The
yeah.
banks themselves are heavily, their success is heavily predicated on real estate in Canada.
Mhm.
And again, when we look at employment and the construction cycle and how much we rely on that as a GDP contributor. So
Mhm.
somebody's just finally admitted that, hey, when you become like, kind of distortedly dependent on real estate, it's not something you can unwind.
Mhm.
So, in spite of what has been thrown at it now, we're left with this new strategy, which was tons more supply and maybe a little bit of a curve on population. So, how's that going, guys? Let's evaluate this strategy.
Not going. Our population is still booming, and construction starts are plummeting. So the plan's not working out so well. We'll see what happens with population numbers. Obviously, this is mainly their plans mainly with non-permanent residents. We'll see if they actually do get cut. I mean, it's still early, but the numbers aren't looking very positive. Construction's slowing down, so I don't know what the plan is from here.
Yeah, so it's like homeowners don't even have to worry about their prices coming down because the CMHC report was predicated on all this supply being unleashed.
Well,
Well, the
yeah.
market seems to have dampened that supply. I mean, this is the other problem. The government on the supply side is claiming to be able to do more than they can. I mean, the truth is the conditions are just not there for building.
Well, exactly, 100%.
I think what happens though is like, from like a building like oversupply perspective, yeah, no builder is going to build into like a down market, right? I think what happens is like any real estate cycle, like developers and builders get over exuberant during a frenzy. And ultimately that excess supply only shows up in the downturn. And I think, I mean, to me, it feels like that's where the GTA is today, right? I mean, people got in over their skis during the heights of the pandemic, and only now are you starting to see some of those high rises completing because they take so long to build that you're seeing like that excess supply. And I mean, I think that's just a classic real estate cycle. So, I mean, I think there's an argument to be made that if you can, ease up permitting and loosen up land regulations so that developers can more freely overbuild during frenzies, I think that they will. I mean, I think I see it a lot in like places like Calgary. It's just way easier to build there, and they always end up overbuilding during their boom times, and then they get left with excess supply for years. And like it's gonna
Yeah,
happen
and that
again.
was a big story, right, John, in the US with
Yeah,
the
100%.
2008 subprime crash.
Yeah,
It was the places that had built really quickly, like
yeah,
Phoenix,
exactly.
Las Vegas, that
Yeah,
went down
Yeah.
just
exactly.
as quickly,
Yeah.
right? So
I
all
don't
this
know if that's
excitement we
ideal
had,
either, but
yeah,
anyways.
yeah. I mean, but this is the irony. Like every solution that's being touted, that's why housing is such a pernicious problem. Everyone's like, just elastic supply.
No,
Nothing went wrong with that.
I know.
Well, it, you
Yeah,
know,
I mean, there is no silver bullet. That's the the
No.
honest truth. And yeah, I don't think it's really a free market. I think it's kind of a manipulated market. But
yeah.
again,
I
it's probably not what
guess
we want to hear.
I guess what you are saying is we'll see if the first correction, if there is going to be one price wise, will they, how long can the banks, everybody start propping up the condo market? So we'll see if that dynamic is probably the first to, would you say that would be the first segment that we might really see a change in?
I think the resale condo market, because listen, the banks and the government can do a lot of things to try to control housing, but they can't control what happens on the resale market in real time. Like that's just, you only have so many levers. So I think the resale condo market is going to be an interesting one to watch because they can't control how many people are listed on the MLS and what a seller takes and how motivated they are. So in that sense, I think that'll be the one segment important to watch.
All right. And other than that, what do you think? An uneasy stalemate until we talk again next month?
Probably. Yeah, I think so.
Yeah, I'm kind of curious to see, what happens next for the Bank of Canada, but
I feel like it feels like the rebuilding of the Leafs. Like we don't we don't know if anyone big is going. We kind of got a new coach.
Mhm.
What's going to shake out next? Not really sure yet, right?
I'm not
Well,
expecting anything in July. Are you expecting another cut in July so soon?
I mean, I don't know. I was trying to look at market odds. I don't have it up in front of me right now, but it seems like I think the next one would probably be by September. But like, yeah, like I said, even if you get 75 basis points of cuts this year, it's still half of what the market was expecting coming into this year. So, and that still, like I said, still leaves your variable rate mortgage north of 5%.
Mhm.
So, I can tell you this is like, it's not going to save like a lot of people that are kind of already in the the delinquent phase or are really falling behind. I don't think like 50 to 75 basis points isn't going to help them. I mean, I'm thinking a lot about like developers that are struggling and basically are in default of some of their loans that are going through these litigations right now. Like, 50 basis points isn't going to help them. They're done.
Mhm.
And those delinquencies will show up in the courts next year.
Mhm.
Yeah.
So it just takes time, right? It's funny, like, Ben Rabideau posted a good chart today on Twitter, right? Which it was like historically, um, you actually see mortgage arrears rise after the first rate cut. Like
Interesting.
they
Yeah,
start cutting rates, but like
that makes
delinquencies
sense.
because it's delayed impact, it's a
Yeah,
delayed effect, right? Like,
that makes sense.
so I don't think this is going to be any different. I think that we'll continue to see more people falling behind the eight ball, and it takes time for rate cuts to filter through, just as it took time for rate hikes to filter through.
Yeah.
All right, so let's do this again and see if anything's moved in a month. Thank you again for all your insights. Thanks to all of you for listening and watching. And you can keep the conversation going on X, Twitter. John is at John Pasalis. Steve is at Steve Soretsky. Our show is at Move Smartly. And yeah, keep your engagement coming. We appreciate it. And we'll see you next month.